My name's Simon Maddox. I'm a partner in the commercial real estate team at JMW. Obviously, I'm a real estate lawyer working for clients across the UK. However, I'm most perhaps intimately familiar with the Manchester office market, which I think is what I'll talk about, albeit I think it probably provides a fairly reliable snapshot of the sort of trends permeating the UK market. Generally, offices in Manchester are doing very well. In 2021, we had in excess of 1 million square foot of take-up of office space, a large proportion of which was as a result of inward investment, which is obviously investment coming in, with new requirements coming into Manchester. Manchester's always historically done very well for inward investment. However, over the last 18 months, it's really sort of really benefited from that. Take-up from tech companies has been huge, approaching 50% of take-up over the last year has been from tech, and obviously schemes such as Circle Square and Enterprise City have really benefited from that. So I think overall the picture looks rosier. However, I think there are other factors in play which perhaps render the question a little bit more complex. I think we'd be foolish to ignore the shift in thinking, which in my view was sort of starting pre-pandemic, but which has really come to the fore and been accelerated post-COVID. Safe to say that the enforced home working has really affected what people expect from their sort of work life and what they expect to see from an office space. From a developer's perspective, I think gone are the days when you can sort of knock a box up with sort of minimal features and expect huge tenant and occupier take-up. New work paradigms, new business models based on flexibility, amenities, so even having fun in the workplace. They've all shaped the way that investors and occupiers look at offices today. The market we're operating in is extremely competitive, and the requirements of tenants and occupiers have never been more varied and demanding. As a result, office owners really need to be stepping up to the plate and delivering a product that really is best in class. Yeah, I think post-pandemic prospects look good for those landlords who are prepared to meet those sort of high demands and requirements of tenants, and perhaps not so good for others. Ultimately, I think those landlords and investors who are prepared to adapt and sort of innovate generally do well, and those who sort of stand still and don't move with the market trends will no doubt do less well. I think the demands and requirements are here to stay, and I think ultimately tenants will vote with their feet if their demands aren't met. I think in terms of other trends, obviously flexible working has been a sort of watchword for a while, and I don't think it's shown any sign of abating during the pandemic, but perhaps with a slightly different emphasis. I think flexible working obviously offers more control, and I think there's a lot of companies coming out of the pandemic who perhaps may want to sort of see how the market goes over the course of the next 18 months, 2 years, and flexible working obviously gives them that ability to be agile and sort of adapt to the market. So I think that's flexible working is certainly a trend that's here to stay. Environmental credentials are hugely important to current occupiers. I think sustainability was something that's talked about a lot in Cannes this week, and it's certainly important in the office sector. Tenants are showing a much more active interest in the credentials of the building that they look to occupy, and I think landlords are going to really have to step up to the plate to look to meet those requirements. I think the challenge will be that obviously there's a capital cost to those requirements. The cost of materials has never been higher, and I think the challenge from a landlord's perspective will be to deliver that truly sustainable offering as we move towards a net zero future.